Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Trust the Rally. We're going to talk about a few things that may give you pause here regarding this rally. We've had a 9-day zigzag rally from the low of October 4th. And this coming week, I think, is going to be absolutely critical. Do we roll over? Or do we continue to push higher? I could tell, a lot of folks are thinking, well, we're only like 2% away from the all-time highs. Surely we're going to push to new all-time highs. Well, we'll see. We'll take a look at some examples that may give you pause. All right, first, let's take a look at what happened this last week with the Dow Industrials and the S&P 500 and the NASDAQ composite. The Dow was up 548 points. Pretty strong week, back above that 10-week moving average. The interesting thing, though, if you go back over here to the week of May 2nd, and you look to see where did we close on May 2nd, we closed at 34,777.76. I mean, we're up, really a whopping 500 points in the last 4 months. So we really have just chopped sideways for the last 4 months on the Dow Industrials. Now, a little bit stronger over here on the S&P 500, no doubt, up 80 points for the week. And then the NASDAQ composite has also had quite a bit of strength in it, and it was up 318 points for this last week. All right, let's go back and take a look at the S&P 500, which is going to be our focus for this weekend. Okay, here's what's happening this year. From the high on September 2nd, we've had a decline of 21 days down to both the closing low and the intraday low here on October 4th. And since that October 4th, we've had a 9-day zigzag push in here to the high that happened on Friday. The interesting thing, the couple things. The RSI is sitting at 62.6. And the advancing and declining issues on Friday with this move, there were more stocks down than up on Friday. All right, first thing I want to show you, so let's go back in time and let's take a look at just 2018. Now, what's interesting, I need to get it lined up a little bit better. Here we go. Here's 2018. And let me look at my data. We're coming off the September 21st high right here. Here's the intraday high on September 21st. To the intraday low here on October 29th. This was 26 days, okay? 26 days. Then we had a 7-day rally that took us up to an RSI of 61.2. Then we collapsed back down, kind of retested that low to a certain degree, didn't quite take out the intraday low. Then we had another rally. So the market trapped the bulls twice. This was really, really a tough situation, but look how it did it twice and then hammered it into December and that December 24th low. So interesting comparison in here in my mind. Fall, again, September 21st, and then you're talking about the first rally high on November 7th. Now, an even closer comparison is to go back and take a look at 1987. So let's look at 1987. And there we go, getting a little cooperation out of the market. Now, here's what I want to show you. Coming off the high on August 25th, and I'm going to go to the closing low here on September 21st. We're talking 18 days as compared to today in 2021 of 21 days. So 18 days versus our 21 days. But we then had a similar 9-day rally that took us to an RSI of 64.3 versus our RSI of 62.6. Very close in the neighborhood, okay? Then we got a pause, similar to kind of the, the pause type days that occurred, on one of the rallies in 2018. And then we get the hard down, closing below multi-day lows in here. And within 6 days, we take out that low of September 22nd. And then rapidly, we get the collapse that happened in the crash of 1987. Okay, so, everybody talks about Black Monday. Well, it's really interesting. Yeah, you had the rally Tuesday, Wednesday, but you came back down on Friday. It's Thursday, Friday. I guess it was the following Monday, and almost retested the same low, and you actually took out that low on December, where is it? Right here, on December 4th. Okay, so that is an interesting comparison. I'm not saying the exact same thing is going to happen. All I'm saying is the rally that we're experiencing right now, it does give me pause because we've had some setups that you can look back into the past, 2018, look at 1987, and say, well, pretty interesting time. Also, it's very interesting, 1987, the rally, the 9th day, the rally day was a Friday. Our rally day here, the 9th day, Friday. And we had more declines than advances on Friday in 1987. They actually had a few more stocks to the upside than downside in 1987. So that's the picture, that's the setup, that's the thing that gives me pause. Let's take a look at the Elliott Wave picture in here. Now here's what I would say call the more optimistic that says what we're doing is a larger correction. I just don't think that we've corrected enough yet. We haven't even hit 23.6% in terms of the move down. So right now I'm looking at this as an A, B, C. It's possible that this corrective activity here, what I've got, okay, let me get you a step back for a second. Leading diagonal for wave A, and then a combined corrective WXY for B, which would imply that Y may not be done yet, but there is an alternative that could say, yeah, it could be, okay? Because when we drill down and take a look at the 130-minute chart, let me zoom out of this a little bit, okay? You could make the case that says we had an A, B, and C, and that we may be done. I'm looking at the 130-minute chart, and that the B wave is a running flat, and that we're then done with the high that occurred on Friday. It's also really interesting to see that this is, well, in terms of the 180, the 130-minute anyway, the highest overbought situation since when? Back over here on September, let's see, August 30th, into that high that occurred here on September 2nd, like right before the high, right in here. Okay, so pretty interesting situation we've got ourselves in terms of the degree of overbought, the timing, the similarities, all of that. Okay, so that's the picture on the S&P, watching to see what kind of rollover do we get this coming week. Okay, let's take a look at the McClellan oscillator. Okay, but before we do that, I want to give you a little plug here that if you'd like more of this kind of information on a regular basis, head on over to my website at joehenches.net. Check out the website, check out the membership, and become a member. All right, everyone, let's take a look at the McClellan oscillator. Now, on Thursday, we got to the most severely overbought situation since all the way back in February. So none of these rallies that occurred this year since February have gotten us to the point where we're that overbought. And then we came down a little bit on Friday, so it's going to be interesting. Do we get a little pause day on Monday, bring us up just slightly, and we create a little M top in here that then sells us off? That's something to think about. I'm watching for anyway. All right, so that is the McClellan oscillator. I talked about the advancing and declining issues that were only, negative on Friday, and that was Friday is when we were up 33 points on the S&P 500 and 382 points on the Dow Industrials. Let's take a look at the percent of stocks above their 50-day moving average on the New York. Now, here's the other interesting thing. I talked about the 130-minute chart being the most overbought that it is since September 2nd. Look at where we are, or what we hit on Friday in terms of intraday high on the percent of stocks above their 50-day moving average. The intraday high was 58.54. Back over here on September 3rd, here's September 2nd, here's September 3rd, 58.64. Almost identical situation in terms of what we hit on a little rally coming into that September 2nd, September 3rd, and then we drop off. So here we are sitting in the same exact level again. All right, so enough on the market. Now I want to take a look at one of the commodities this week that really took off, and it was the biggest performer, copper. Okay, here's CPER, United States Copper ETF, really exploded this week, up 10%. You can see we've been pulling back, chopping around, whatever. Here's my Elliott wave interpretation of the price action. So on copper, I believe coming off this low of March of 2020, we had a strong impulsive wave one, primary. I've got it labeled as primary wave one coming down. And then we had a WXY, kind of a little messy corrective pattern. But what's interesting is this last, the Y correction. When you have a WXY, what you're talking about is you're talking about multiple corrective patterns in here. Zigzag, and this one to me was a triangle. Okay, and so the interesting thing about with the triangle in here, zigzags and ending right here, we exploded out of that. When you have a triangle situation, a triangle always is the ending pattern before the next move to the upside. Okay, so you can't have a triangle first, okay, unless that's all you're going to have. But when you have it over here as the second position in the WXY, it's telling you that that's the end of the corrective pattern, and then look at the explosive move that we got to the upside. So it's going to be interesting to see. Now, when we look at this, I'm only seeing one little corrective move, part of this move. So we may have more to go, but I honestly would be, I'm not sure I'd be jumping in just right now, kind of be waiting for maybe a pullback or something. We are getting overbought. We're more stronger than what happened here in July. We're back up into the kind of territory that we got into back earlier in the year. But it's a nice, strong move. And what's in sync with this is a stock, Freeport-McMoRan. Okay. Now, I've got Freeport not as wave one and two. I've got Freeport as this is the end of a fourth wave. Now, the way I've got this labeled is coming off this low here in January 2016. This is one sharp wave two pullback, and you could almost say this is a cycle wave. Okay, so let me tell you what, here's what I'm going to do. I am going to change this to a cycle wave. Then what that does is that says, okay, we got a bigger move coming, which kind of implies that, puts us a little more in sync with copper, because I think we're just in the second primary wave up. So it's a little bit 6-1, half dozen of the other. Whether you call this a cycle wave, you call it primary waves. The bottom line is, I think we've had the end of a corrective move here, an ABC pattern, a little bit different. Don't think this was a triangle. I think this was an ending diagonal pattern here for wave C on Freeport, but now we're off and running. Okay, so that's the comparison. We'll see where Freeport goes and see where copper goes. We got a lot of moves, over the last year with commodities, and you look at the Bloomberg Commodity Index, and it just keeps pushing in here. It was up 2.11 this last week. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. And again, if you're not a subscriber, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website. Check out the membership. Everyone, have a great week. It's going to be interesting. Talk to you on the next video.